Good morning. Welcome to this meeting of the Scottish Affairs Committee looking at energy and the just transition. Before I go any further, I'm going to pass over to Jack Rankin, who I think wants to make a declaration of interest.
Thank you, Madam Chairman. Just to highlight to members my financial interests on my register of interests, and my career was in renewable energy, particularly trading electricity and new build development, and I remain a shareholder and director of an advisory business which helps funds originate and structure long-term power purchase agreements.
Okay, thanks Jack. Thanks for the clarity on that one. So good morning Louise and good morning Hebe. We're just going to go straight into our questions now. So can I ask you both to introduce yourselves and give us a short explanation of your role in the company and the role that your company plays in the North Sea?
Certainly. Me first?
If you please.
Okay, thank you very much. Morning everybody, nice to see you. My name, as you've heard, is Louise Kingham. I am the Senior Vice President for Europe and Head of Country for the UK at BP, which is a role that I fulfilled for the last 3.5 or so years. That means that I have responsibility for working across that region in terms of trying to integrate our businesses and look for opportunities for their development, both in terms of oil and gas, but also in terms of our low carbon investments across every business that BP has actually is operational across that region. We have a lot of activity in Scotland, as you'll be aware, as an operator that's been there for, I think, 6 decades, just over 6 decades. We have an economic impact there of around 2.2 billion gross value add to the economy. Last time we looked back in 23, we've spent 720 million with suppliers in Scotland and across the UK. We support 2,000 jobs directly and 11,000 jobs indirectly in Scotland, and produced, last time we quoted the numbers, 59 million barrels of oil and gas back in the end of 23. We've not reported the 24 yet. So 1.9 billion paid in taxes in the UK, 636 or so of that related to the Energy Profits Levy. And across the UK, we have an investment programme of up to 18 billion. About between 30 and 40% of that is pointing at oil and gas investment, potentially, and the remainder is across offshore wind, carbon capture and storage, green and blue hydrogen, our retail and our convenience network, and so a very diverse portfolio of investments across the UK, much of which touches different aspects of our businesses in Scotland.
Thank you.
Thank you. Hi, I'm Hebe, Trotter. I'm the Vice President and Global Government Relations for Harbour Energy. I joined the company about 5 months ago, so bear with me, but I'll hope to answer as many of your questions as I possibly can. We are predominantly based in Aberdeen and employ over 1,000 people in Aberdeen, but actually over 1,300 people in Scotland, including all of our contractors. We to date have spent £4.6 billion in the UK between 2021 and 2023. Largely, we are an oil and gas company. We're proud to be an oil and gas company, but we also have projects in carbon capture and storage, both in Scotland in the Acorn project, where we're a 30% investor, but also in the Harbour, one of the highest emissions industrial areas, where we are the transport and storage company. So in total, that is billions of pounds of GVA that the Harbour Energy is looking to bring to both Scotland and to the wider UK in terms of jobs, growth and opportunities for our industrial heartlands.
Thank you very much. Could I ask how long you expect to extract oil and gas from the North Sea basin?
We have plans, very clear plans out to 2030, and the potential to look much further ahead than that. The challenge that we need, so there's a lot of economic opportunity still to be had from the basin, whilst recognising that it's a mature basin, which I think we all understand, but there is a lot of economic opportunity for Scotland and for the UK. What we need to be able to unlock that, I think, is clarity around the policy and the regulatory frameworks and the fiscal environment post-2030. So we know some of the shape of that from a fiscal point of view, given the guidance at the budget around the Energy Profits Levy and the sunset to 2030. But actually there's quite a bit of outstanding information for us as potential further investors to be able to get clear on consenting, the future arrangements for consenting and permitting, future arrangements around Scope 3. We've responded to that consultation, very happy to share that with this committee. Now we wait for the government to respond to that so that we can get clarity. And I think, in essence, Chair, what we need is active stewardship of the basin, recognising it's mature with the right fiscal and regulatory environment that competes with other places in the globe where this work can happen. And that's how we retain skills, economic value, supply chain here in the UK and in Scotland in the North Sea.
I think it entirely depends on what the economic and fiscal situation looks like as to the success that it could bring for both our companies, but critically to Scotland as well. So if we're in a position where we have the right economic environment and the right regulatory environment, then for both our proven resources and also those that are commercially viable for us to extract, studies show that there are up to 20 more years of extraction available, and then beyond that, there is more of yet to find discoveries if we were able to proceed with further licenses. So there is a huge economic opportunity in Scotland and for the rest of the UK, if we're able to proceed, but that is only going to be possible if we see a better, more sustainable fiscal environment. And the reason why this is so important is not only is that critical for future production, but it's that future production which underpins jobs, particularly in Scotland, which underpins growth, which the UK is so desperately in need of, and that also underpins the ability to transition into that cleaner energy and see those green technologies that we're so desperate to be able to roll out over time as well.
Thank you. We've had evidence that we've seen has from the Port of Aberdeen has indicated that the basin is declining more rapidly, than previously anticipated. Do you agree with that assessment? And if so, what do you think the reasons for that are? And laying aside any fiscal problems or difficulties or hurdles that you have to overcome, is the maturity of the basin also impacting on the profitability of extraction?
I haven't seen the details of that assessment by the port, so I can't appreciate the comment specifically on that. But as a general point, investment has definitely slowed right down, almost to being on. We're in a holding pattern at the moment for the reasons that I've just described in terms of the clarity we need around the fiscal environment post 2030, the regime for consenting and permitting, and any changes to that, future licensing, as Hebe's mentioned. So if we can get that kind of certainty and stability back into the system in the UK in terms of the policy and the regulatory framework, then we can then look at the economics of investing and see if that meets our hurdle rates and if there are the right conditions then to do so. So I think it's widely understood that the basin is mature and therefore it will be in a slow decline. And if you wanted to say has it stalled because investment has slowed, then that the practicalities of that are, yes, we cannot invest until we have certainty around that framework and feel confident that it's a good use of investors' money.
And I think just to back up what Louise was saying, Chair, so OE UK, who I know you're hearing from later, have put out in reports saying that if there is the right fiscal environment, then, we could double our oil and gas recovery, but also add £200 billion worth to economic value to the UK, and most of that in Scotland. So there is a huge upside. I think the reality is both of us work for international companies. We have to compete for capital, and we have to compete for capital from within our own business as well. And there are plenty of other countries that we operate in that have a more favourable fiscal environment. And every pound that is decided not to be spent here in the UK is essentially fewer jobs, less money in terms of tax receipts to the exchequer, but critically lower investment, meaning less growth and less economic value for Scotland.
So how much influence does the decline of the basin have on your decision making? I'm trying to extract the two sides of the problem.
I understand, Chair. Thank you. I think there's plenty of economic opportunity. So I don't think it's a major factor. Actually, the things we've been referring to about the the regime, the framework in which to be able to invest, those are the things which are really important. And if we don't have clarity on that, then the basin cannot compete with the other basins in which we operate, and the capital will be drawn there. So, understandably, because it's the best use of the capital to be deployed. So that's the opportunity that we think is there. There's great economic opportunity still to be had. The Committee on Climate Change have said that oil and gas will be with us for decades to come. They've also, I think, made the observation that North Sea production is lower carbon production. We've made great strides in the North Sea in reducing emissions, and will continue to do so under the transition deal. So from a productivity, from an economic value, from a jobs point of view, it makes absolute sense to be able to make the economics stack up and continue to invest.
Harbour's a fairly new company. We certainly haven't been operating for 60 years, like Louise to my right. But we chose to invest into the North Sea because we saw the value that was there, and we saw the possibility to still seek further production and hydrocarbon extraction. So we do think that there are opportunities there in the North Sea, but these are not really going to be commercially viable if we don't see the stability of an economic and regulatory landscape that supports and allows for further production.
That's very helpful. Angus, it's your question.
Can I ask a question? I mean, there's a lot of commentators and a lot of the political parties have a view that it is not environmentally friendly for us to extract oil in Scotland, but they do believe it's fine to import it from other countries. And then people who are, and then the opposing argument is actually it is more environmentally friendly and less, it's more environmentally friendly to drill here and extract it here than to import it. And if that is the case, why is there not sort of consensus to maximise our own extraction of oil and gas?
Yeah.
If I may, your guess is as good as mine. But you're absolutely right. So we use 70% of our energy at the moment comes from fossil fuels. And, you know, the Prime Minister himself has said it's here for decades to come. Data from the 6th CCC budget showed that we're going to need 25% of our energy to come from oil and gas in 2050. So it's clear that we still need to use oil and gas in our energy generation, industrial use, and of course for transport, but we will see that change over. If that is the case and we can't switch off and change to renewable technologies immediately overnight, then you're absolutely right. It is better to use the domestic oil and gas. But the first and foremost one, other than obviously the benefit to the jobs and economy, is that actually, particularly for gas, if you use domestic gas, which is about 50% of our energy, of our gas use here in the UK, it comes at a 4 times lower emission use than that if we import LNG from abroad. And we do use imports to date, and we will have to start using more of that. But as a result, it surely is better to use more of our domestic production for as long as we can at a lower emission rate. I agree.
Can I ask then, under the transition deal, industry is committed to deliver a 25% reduction in emissions by 2027 and I think 50% by 2030. How confident are you that these targets will be met and that we'll reach net zero by 2050?
I think we have. I mean, you've got members that are coming from a more sector-wide place that are speaking to you, I think, after us. So they may want to comment from a basin-wide view, but certainly from our views at BP, we're very positive. We've made some great progress. That 50% target is retained for 2030. We believe it's right to decarbonise, just related to the previous conversation. It's the right thing to be doing. I think there are different routes to doing that. Last time I looked at our stats, if I remember rightly, we'd reduced operating emissions in BP's operations by over 30% from 2019. So we are confident that we can keep making that progress, and we've also significantly reduced the methane intensity by deploying drones and other technology to help us with that too, which is another important aspect of taking out of the energy system the things we don't wish to retain while we want more energy.
From a Harbour perspective, so we have reduced our emissions by 30% since 2018, which is above industry standard. So at the moment, the industry standard is about 24%. And we do think that we are on track to be able to hit our 2030 targets as well. I think what's interesting is, so looking at the Climate Change Committee's report out this morning, if anybody's had a chance, it says that by 2040 we should be reducing, and it looks like we are on track to reduce emissions from the oil and gas sector by a further 40%. That is including new investment into new oil and gas and future oil and gas from the North Sea. So we are on a trajectory that allows us to both further produce and still reduce carbon emissions, which I think is critical.
Thank you. Harriet, what's next?
Hey, thank you. And I should first say my partner works for Harbour Energy, though not in the oil and gas side of the business. Thank you both for coming. And I was going to talk about licensing and permitting, which I think Hebe you've already touched on. What is your view, or the industry view, on the government's position of not permitting new licences, and either from your individual companies or from the sector as a whole? Because obviously there's a lot of interconnected businesses up in the North East.
Yeah, there are, Harriet, you're quite right. It's I think one of the areas for clarity with this conversation is that they are actually probably two different conversations. One is around how consenting and permitting will be treated going forward, which is the bit I think, certainly from BP's point of view, is more critical, because licences can have been awarded many, many years previously, as you'll appreciate, before you then want to sort of activate them and get into production and development and production and so on. And that's where the consenting and the permitting part is important. So the clarity around that in relation to Scope 3 and any changes to consenting and permitting are the answers to the questions we need to get in order to release further investment, because that degree of uncertainty is a real barrier to future investment. I think the question of future licences, the basin is a mature basin, so it's unlikely that there is significant frontier development type exploration remaining. But that said, there is still an awful lot of opportunity, as I said before, to economically develop in the right framework against the licences that we already operate. So actually my preference is to get the clarity over consenting and permitting in as quickly as we can, so that investment can start to flow again in the right circumstances.
I would back up what Louise said and say that actually speed is of the essence here. I think we are on a critical time sort of path, and we need to have clarity as soon as possible. I think also picking up on something you asked in your question about the interconnectedness of companies, and it's that supply chain piece which is really, really important that I think we mustn't underestimate as well. So, you know, a decision by a company, an oil and gas company, not to go forward doesn't just impact the oil and gas company, but supply chain underneath. And for to give one instance, a decision not to go ahead with a contract to one company has a massive cascade effect to, you know, nearly up to sort of 20, sometimes even more companies underneath of them not getting their further contracts as well, which is to the cost of hundreds of millions of pounds to the UK. And those are the same companies that will be providing support to the clean energy transition that we need. So we need to be able to provide support to those supply chain companies that allow for us to manage that route over towards clean energies that is so impressive within what the UK is doing, and also the big ambitions that this government is setting out for us.
And I think, if I may, just as one final point to that, this transition will happen over the next few decades. This is not going to wake up tomorrow morning and we're in that place. And so the art for us as those that are investing across these businesses is to get that transition, that balance right from a workforce and a supply chain point of view. So timing is everything. And if we don't get clarity swiftly to some of the things we've already been discussing, then we start to create the danger of a cliff edge, where you cannot do the things Hebe's describing in retaining workforce, retaining supply chain commitment, because there's a big wide world out there and there's global competition for what we want to do here in the UK. And so that's the risk we make by getting out of sync on the point of timing.
Thank you. And then looking at sort of, I guess, the two hot topic fields, which are Jackdaw and Rosebank, Obviously, they've got their licences. It's the consents which are the question at the moment. What damage will it do to the sector if, one, there's speculation about whether those go-ahead continues for too long, and secondly, if they were not granted based on the consents, despite them having their licence, what impact will that have either to your businesses or others investment up in the North East?
Well, BP is not involved in those particular fields, so I won't.
Harbour.
Neither is Harbour. Yeah, so I won't comment on the detail of Rosebank and Jackdaw. But as a principle, we've already seen everyone pause to wonder what's coming next. Because it's created a lot of investor uncertainty. Because clearly, if you have spent millions and millions of pounds investing in the development of a field to produce, and then that gets halted. Or consents get withdrawn, you are in a very difficult position. And so to bring in that clarity around the future of consenting and permitting is really, really important in order to build investor confidence back in to the North Sea, which is really, really important.
And I'll reiterate the speed point again about needing to have clarity as soon as possible. I think we should also not forget that, Rosebank will provide 2,000 jobs predominantly in Scotland. Jackdaw will provide around 6 to 8% of the UK's gas supply and need, and will bring, both projects will bring huge amounts of value and GVA to predominantly Scotland. So there are real values for both of those projects. We're not in either of them, but what we do need to see is the clarity around the consenting, the permitting, and also the future fiscal framework to allow us to be able to hope to support with further investment of our own.
And you have to compare that with the stability of other basins globally. What's happening in those basins, what's the framework and the environment like to be able to invest in other basins compared to the North Sea. And at the moment, that's difficult without the clarity we've been asking for during the conversation.
Thank you very much.
Susan Murray.
Thank you very much for that. So given what you've been saying about speed and clarity, and knowing that the UK government is about to launch a further consultation on licensing, what outcome would you like to see from that? And how much have you already been engaging with the government in that area?
Difficult to say what we expect from it before seeing what might be in the consultation, clearly. But we have been constructively engaging with government since the change of government back in the summer, and obviously previously under the different arrangements within the industry. I think the engagement is constructive. The conversations have been very open and transparent. There are clearly difficult decisions that governments have to take across the portfolio of choices to be made. But I think I go back to my earlier point, if it's the consenting and the permitting answers that are more important actually to near-term and medium-term investment opportunities than the longer-term decisions around whether or not future exploration licences, for example, will be granted. So the fiscal environment, the regulatory framework and the around permitting and consenting would be our priorities, and clarity over scope 3 and how that relates to consenting and permitting would be my priorities when I look at what BP investment portfolio looks like. Clearly, it will be helpful to appreciate the future of licensing in the wider, longer-term context. But as I said, many companies have got licenses that they haven't yet brought into action in a development and consenting context. And so there is economic value to be had before we almost get to that point in the conversation.
I would agree with everything Louise said. I think for us the more critical consultation is the one that will be issued by the Treasury on the future fiscal framework. So I think for us what we would like to see there is obviously bringing in a stable and predictable mechanism that allows us to make investments against the UK environment, and ideally one that is beneficial to both the Treasury and of course to companies, and if that is the case then allowing it to be brought in earlier than 2030, because 2030 for us is too late in terms of being able to continue out our investment into sort of the future of the North Sea.
Do you feel the government is listening, is hearing what you're saying? what the industry is saying?
Yeah, certainly the experience was constructive engagement between ourselves and government in the run-up to the budget all through the summer, when we were very focused on the energy profits levy and any changes to investment allowances that were being discussed at that point. And I genuinely felt that we were listened to and were heard in difficult fiscal circumstances. And again, much of that conversation was about the value to the economy, the jobs, the supply chain, the tax contribution to the exchequer, and the significance of all of that over as we projected forward. So I do think all of those things are understood, appreciating that there are sort of difficult wider decisions. We're not living in a windfall world anymore. That has long gone. Taxes are a matter for government to make those decisions about, but it's understanding and having a stable fiscal regime, as Hebe says, which is important. We can't make investment decisions today not knowing what that regime looks like from 2030 onwards, or if it was brought forward, because these are 10, 20, 5-year investments, maybe longer. So that's the vulnerability without that clarity.
Thanks. Elaine.
Sure. Good morning. So how has the UK government's energy profit levy impacted the North Sea oil and the gas industry?
Yeah, so if I can give a couple of examples. So, for instance, last year we paid out 95% of our profits before tax in tax. And then in 2022, our profits after tax were £8 million. So bear in mind that was after we paid a £1.5 billion one-off but associated tax charge because of the EPL. So we are in a world where we're paying a lot of tax, but ultimately what that means is we're not able to compete for capital against all of the different basins that we also operate in and try and promote further production and future investment into the North Sea. And in reality, that has a knock-on impact on jobs, that has a knock-on impact on skills, and that has a knock-on impact on growth to the UK economy. We have unfortunately had to reduce our workforce by 350 people as a result of the EPL. And if we're not able to continue and get certainty over the future of that, then it will have further impacts. And as Louise was talking about earlier, I think what we really want to avoid, because we know that we will be going into a transition to green technologies, but we really want to slow down that pace of change and decline in the oil and gas sector without having a managed transition over to green technologies. Because that gap, that sort of valley of death, as we call it, that means that those jobs, those skills, they just go abroad. They don't get developed in the first place. And that's really critical to undermining the ambitions of the green technology and cleaner energy sources as well.
In the back of that, what are you doing to meet your commitments set out in the North Sea transition deal?
Yeah, so as I said, we're pleased that we have reduced our emissions from 2018 above average of 30%, and we are hoping to be committed to, and we are on track to meet our 2030 commitments of 50% as well. We're also pleased to see that is reflected across the industry. So we'll continue to put the work in there and continue with attempting to really nail down and focus on making this as a lower carbon place to extract hydrocarbons from, because that is the benefit of doing it over and above importing, particularly gas, which comes at a higher emission content.
You'll no doubt be aware of Uplift's view that much of the responsibility for driving the transition from the North Sea has been left to oil and gas companies who have neither the capacity nor the interest to drive transition. Their suggestion, not mine necessarily. Would you agree with that statement? And or would you like to comment on that statement, I suppose? And do you think ironically, the profitability of oil and gas is hampering the growth of green energy or clean energy?
That's a really interesting quote, Chair. And I think the last time I was sat here, Uplift was sat at the end of the table as we were in conversation. And it was an interesting conversation. It's an interesting perspective. And I think it's important to listen to all the voices in the conversation around oil and gas. And I have to say, I don't recognise it as BP. I said to you, we have an investment programme of up to 18 billion, which cuts across EV infrastructure, offshore wind, carbon capture and storage, green blue hydrogen, retail and convenience, and oil and gas. And at any point in time, when I look at the investment programme, we are a third in oil and gas and 2/3 in the rest of what I've just rattled off to you as a list. So I don't recognise that. I do recognise that every company has a different investment profile and a different business footprint in Scotland and across the UK. But I think we have the transition is a challenge. We've talked about getting the timing right, being in balance, shifting supply chains, moving workforce. There's a lot of opportunity in that, but it's difficult to do. But I think what companies like mine can do is to just bring the technical and scientific and engineering capability to bear. You know, we have deep functional discipline capability in the North Sea business, which is incredibly important, and we take it everywhere that we operate, but we make it here, and we invest a lot in people to do that. We have the opportunity to collaborate with partners, which means that we can do things in a more capital-light way, and we can try and accelerate the opportunities, and particularly around low-carbon investment. That is a real opportunity because it is expensive to do. These are sometimes first-of-a-kind projects, but you can use a lot of the capability that an oil and gas company has to deploy on making those things, working out how to do those things and build those things. When I look internally at some of our recruitment, for example, when we were building out the hydrogen projects in the carbon capture and storage and the offshore wind business, almost 40% of the vacancies were filled internally by people moving in from the oil and gas business into those businesses because the skill sets are largely transferable. And it's the context which might be a bit different, but the skill sets can move around quite well enabled. So I think that's the sort of thing that we can bring to the opportunity that the transition presents.
I think I would back up and say the industry doesn't see it as an oil and gas or green jobs. It's definitely an and. This is about doing it together in a way that manages and creates that soft landing for people to be able to move from oil and gas through into green technologies. And BP's example there of hydrogen and CCUS is one of them, and certainly we find the same within Harbour, within our own focus to moving towards CCS projects as well. And I think, reports have found that there's a 90% transferability of oil and gas jobs into clean energy jobs. So there's a very clear read across that we could achieve. But at the same time, with a mismanaged transition and if we don't achieve a managed decline of the oil and gas sector, then essentially we're at risk of reducing our oil and gas workforce by half before we have the requisite jobs on the clean energy side to build into. And I think that's what we need to achieve, is allowing for that smooth landing for people within the oil and gas sector through to the clean energy jobs.
Okay. So just to follow that up, do you think there's sufficient financial incentives for investment in clean energy and low carbon technologies?
I think there are some financial incentives that have become clear. I think there's still quite a lot of working out to do, and I use blue hydrogen as an example for that, thinking about our project in Teesside as something that we need to get sort of clarity on. That's again in process with consultation and discussion and spending review decisions, no doubt. And I think it's, for an investor, it's about the pace of decision making to get to that clarity when you are competing globally to do CCS or hydrogen or offshore wind or oil and gas anywhere in the world. And that's the position for us. We were delighted to be able to get the, in collaboration with government, to get the final investment decisions and final financial close on the big projects in Teesside. And there's more work to come there, clearly, but we look forward to helping to start construction. we got there first here in the UK, whilst others in other parts of the world were working out what the policy framework and the opportunity for investment was. And that's the kind of competitive urgency we need to put back into the system, both with decision making and then pace of execution. And then investor confidence comes with that, the clarity is there and the decisions can be made.
I think speed is of essence, and you know, we have also invested in carbon capture in internationally as well. And actually on the same day that Louise reached an FID with BP in the northeast, we reached an FID in Denmark for carbon capture. But we are still waiting for further commitment from the UK government as to what is the future of the Track 2 programme within the CCUS tracks. We would really welcome movement on that and would encourage the government to bring out further pipelines, particularly within the spending review in June. But without that, and without the speed that enables us to map our investments against it, we're at risk of losing out internationally and to other countries that are moving in many respects quicker than us. So speed probably is the key message there.
So speed and stability rather
absolutely.
than necessarily the financial incentives.
Yeah.
That's very interesting. Stephen Flynn.
Thank you, Chair. Thank you both. I think you've very eloquently outlined how we deliver a managed transition, but more importantly, the fact that we must deliver a managed transition. And certainly for those of us in the northeast of Scotland, that's something we reflect upon quite heavily on an almost daily basis. In that context, could you perhaps talk us through in a little bit more detail the capital resource which sits behind your company's investments in low carbon technology and how that's currently comparable to what you are investing in the extraction of fossil fuels?
Yeah, so thanks, Stephen. I think it probably goes back to what I said at the beginning with up to 18 billion of an investment programme that we announced in 2022 over the coming decade. So we're about halfway through that. It's roughly about 30% invested in and pointing at investing in the North Sea, and then the rest of that across the other portfolio of low carbon investments that I talked about. So 3 offshore wind developments, 1 off the coast of Aberdeen and 2 in the Irish Sea, green hydrogen in Aberdeen, and we're in partnership with the City Council, blue hydrogen in Teesside, about 10% of the government's current hydrogen target that could be developed there. Obviously we've talked about the carbon capture and storage investments in the East Coast cluster, and Net Zero Teesside Power Station, which will be the first of a kind, I believe, at the moment, in terms of the race to get there as a gas-fired power station with carbon capture and storage. And an opportunity, as Hebe's pointed out, for other customers of that system to dock in and take the emissions out of their business and have a sustainable platform going forward too in the subsequent tracks that we would like to see come out of the spending review. EV infrastructure, about $1 billion of that is investment in EV infrastructure over the period. We have, I think, about 3,000 fast and ultra-fast charge points, and we want more. The UK is one of 4 markets we're very focused on globally to make that happen. So we welcome what we read in the Committee on Climate Change from the Committee on Climate Change this morning. And then across our retail and convenience network, what customers would recognise as forecourts that they pit stop in is the other final place where that investment flows.
For us, so we've invested millions already into our carbon capture projects, but fundamentally this all hinges on the spending review and if we're able to see a future where the future tracks will go for the Track 2. So that's for both Viking in the Humberside and also critically for Acorn up in Scotland. But if we do see a beneficial result in the CSR, the spending review, then, you know, in Scotland, so in the Acorn project, it will unlock around £17 billion of GVA and nearly 20,000 jobs. And then in Viking in the Humber, likewise, it'll unlock around sort of up to 15, just under up to £15 billion in investment worthwhile to the Humber. These are both areas that really need that investment as well, and really need us to keep the industrial heartlands of those areas. You know, we want to see decarbonisation, but not a deindustrialisation. So moving ahead with these projects and being able to get that signal in the spending review in June is critical to both those communities, but also to us being able to promote and continue with our green and clean technology investment as well.
Yeah, and I think all of us would, I'd like to think all of us would agree, certainly in relation to the ACON project, which I guess certainty is something which has been lacking for a long time over the course of numerous governments. In relation to BP, if I may, Louise, in 2022, BP had a target to reduce its oil and gas by 40% by 2030. In 2023, it lowered its target to 25%. And it's been widely reported this morning, as I'm sure you're very cognizant of, that BP plans to drop the target altogether. Can you perhaps provide some clarity to the committee in respect to the decision-making process there?
Well, we sit here in the committee with a capital markets update, which takes place this afternoon. So I don't want to preempt the words of my group CEO, but there are a number of announcements that will be made this afternoon around getting more focused, simplifying the company, creating longer-term value, and we will be setting out in that how we intend to approach more activity in oil and gas. As a global organisation, a tighter discipline around our low carbon investment. Again, from a global perspective, this does not change any of the description I've given to you about the UK investment programme I've just described, and a tighter, I guess, a more focused approach to how we're organised with a lot of different downstream businesses, as we call them, which is all of the retail, the Castrol business, and various other things. So if you get the chance, Stephen, to tune into that a bit later on, there'll be materials and information, I'm sure, that gets posted on the website later today, which explains more of that. It doesn't change the activity set that we've got here in the UK. What it will intend to do is to look for further opportunities to develop oil and gas globally. And so that is an opportunity for the North Sea as much as it is anywhere else that we operate. But again, we have to go back to the beginning of our conversation. The conditions to invest need to be the right ones.
Would you, sorry Chair, with your indulgence, this isn't a unique discussion to BP, it's something which has been reflected across the wider energy sector. Do you think that's a reflection of just simply the profitability not being there at present in the renewable space, or is it more a reflection of government policy?
It's a really interesting question, Stephen. I think, the world has changed in the last 5 years. When we first produced the strategy we did back in 2020 before I joined the company, I don't think anyone saw pandemic coming. We didn't see the invasion of Ukraine. We didn't see cost of living crisis. So the world has very much changed, and that's meant that through all of those experiences we've lived in, the transition has not happened as quickly as we would like. It's going slower, essentially. And so our job is to do three things, I think. It's to invest in the energy system right across that system in the most efficient way for our owners to see value. And you're right, some of the investments have not returned the kind of value I think the industry-wide they would have liked to have seen. So that's a challenge. But I also, I think the other thing that we do is a responsible business is you then pay your taxes on the back of that, and you return value to shareholders. That's what businesses have to do to be in business, which hopefully is appreciated. But I would point to, again, I think the other thing we've seen from where we were 5 years ago to the capital update we'll do later today. We have the biggest bioenergy company in Brazil that we purchased last year for our bioenergy business. We have I think the biggest biogas business in the US that we have also acquired. Again, I think that's number one there. We have acquired the rest of Lightsource BP, have 100% ownership of that, but we will be looking for partners to come in and join that work with us, because it's the most efficient way to try and invest in low carbon and accelerate the growth in those businesses quickly. And then we have also announced the joint venture with Geranex to create Geranex BP, and that builds the 5th largest global offshore wind company in the world. So it's about doing it, and we remain a net zero company. That ambition has not changed, but we have to get smarter and more efficient about how we get there, and look back at what we've learned in the last 5 years and think, what does that do for our midterm plans for the next 5, and how do we adjust to do that in the best way possible and the most efficient way possible. So that's what we're trying to set out later on today. So if you can make some time to watch, please do.
Would it be fair to say that the tag that a previous CEO gave to BP, and when he described it as BP now meaning beyond petroleum, still holds?
I think that's where the world ultimately needs to go. We just have to recognise that that transition is going to take longer than we thought when we sat there 5 years ago writing that plan. And I think that's the fair and honest reflection of what we've learned in the past 5 years. We've tried to do an awful lot and probably spread ourselves a little bit too thin. Every company has got a limited capital frame to be able to invest in order to grow. And we need to keep the energy that the world needs today alongside developing the energy that the world needs for the future. That's what the investment programme we've got here in the UK is trying to deliver. And I think, as Hebe mentioned earlier, on average, an offshore wind farm takes you about 13 years to build. Right? I can get a North Sea investment and a tieback within 2 to 3 years before I can get a third of the way into that, or a quarter of the way into building that wind farm. That's the bit that we have got to try and readjust and get in balance so that we can, and it does come back, I think, to that pace of decision making, clarity on policy, clarity on regulatory framework. And I think this, I made the point at the beginning, active stewardship, recognising it's a mature basin, so to compete with investment with the rest of the world, that's how we've got to look at it when we think about the policy and the regulatory framework we need to have post-2030, or on the back of some of these consultations we're waiting for decisions on, or waiting to even see.
And just to give a bit of colour on that difference of pace for oil and gas and for clean energy jobs. So the ONS data shows that there's about 3,500 jobs going into clean energy every year. That will likely increase, and we hope it does. But we're seeing about 32,000 oil and gas jobs be lost over the last 5 years, certainly compounded by the EPL and the impact there. We've got to manage this pace more effectively and allow for that transition, because actually the slower pace you're talking about of the renewable transition, that could be prolonged or made even worse if we don't manage that effective crossover from oil and gas jobs into clean jobs. And there's a huge opportunity to be missed here, particularly for Scotland, where most of these skilled jobs are. And really the only place that they could go is abroad, or the skills just aren't developed in the first place. So we have to do everything we can to try and avoid that.
Thanks. Lillian Jones.
Thank you. Good morning. And this is to both Louise and Hebe. Just what engagement have you had to date, if any, with GB Energy?
So we have had a welcome from DESNZ to introduce GB Energy in the first place some months ago now. I have met with the chairman. Pleased to see that Dan has just been made the interim CEO. So I'd say it's limited, it's light touch at the moment, but I think it's obviously early days for GB Energy as we wait for the bill to go through and get royal assent, I assume targeted for before summer recess. So we're very welcoming of the fact that they've decided to headquarter in Aberdeen. I know that was highly contested, as I understand it, and we look forward to understanding more about how they are looking to work alongside industry. I think there is an opportunity, if we get it right, for GB Energy to help de-risk private investment and attract private investment. I don't think GB Energy can do it by itself, but it's an opportunity positively to collaborate with industry, depending on how the work is structured.
And so I think to start with, we're very welcoming of the fact that as Louise said, it's landed and is headquartered in Aberdeen. Aberdeen is the heart of energy in the UK, and it's certainly the heart of energy in Scotland. So that was the right decision, and long may that continue. I think our request to GB Energy will certainly be engage with the sector, work with oil and gas companies, particularly on that jobs front, because we will be the skills and the sector that underpins that ability to transition at the speed that they want. But without support to the oil and gas industry, that won't be possible. So that's certainly our message to GB Energy, and I hope that they will come forward and work with us as we hope to certainly support their ambitions.
And so, in your view, what should GB Energy's role be in respect of the oil and gas sector and in supporting its transition?
I think, Lillian, there's an opportunity for them to help underpin in different ways the supply chain and the opportunities for the supply chain to continue to work in oil and gas and also to transition. I also think there's some opportunity potentially thinking about the balance of sort of public-private investment for GB Energy to look at how it enables private investment. For example, I'm thinking about infrastructure development where private investment might be more difficult to get it to flow, like the developing of port infrastructure, so that you can have that as an anchor location for building offshore wind, as an example. So you'll have people that want to build offshore wind and developers like ourselves in that business, but actually you need quite a lot of development done at a port to be able to deal with managing that and making it happen. So I think it's thinking about where the leverage of that public facility could bring further private investment. For me, that's what makes most sense, given the scale of opportunity, but also the scale of capital that needs to come in.
I think additionally, GB Energy is going to be active on the ground, right? They're going to be seeing what we see on a day-to-day basis about working environments, the landscape, and the need for pace and also fiscal and regulatory clarity. I think them being able to see it, feel it, and work within that framework means that hopefully they will support us in feeding back to government some of our core messages about wanting to see fiscal stability and predictability. So hopefully they'll become advocates to support both the oil and gas sector but also the green energy sector as well.
Yeah. Just finally, I think you just touched on it there, Hebe, but I'll just ask it anyway. So how can GB Energy successfully crowd in private investment in clean energy?
Yeah, I think it's the point that I just made, Lillian, in thinking about where do they get sort of a best bang for the buck in a sense of public money that enables and de-risks private capital to flow in. I think that's the opportunity in my mind.
I'll repeat, I think that ultimately, them supporting both industry, so for oil and gas and hydrocarbon extraction companies, the supply chain critically that will underpin both sides of the transition, and then allowing for us to manage a decline, not at a pace that we're seeing at the moment, to really boost up the green technologies. That's what GB Energy can do, and that's how they can help crowd in investment, bring about stability and clarity by advocating to government the need for it in order to actually achieve their green ambitions.
We have two supplementaries, Stephen, and then
yes, thank you, John. You'll have to forgive me, Louise.
You've been on your phone, I was watching.
I have been on my phone.
You now know more than me.
And BP have helpfully provided me with some information, which I think it'd be remiss of me not to ask you about, given your presence here today. So it states on BP's website at the moment, it's just been released that the intention is to increase oil and gas investment to £10 billion per annum. At the same time, investment in the transition businesses will be over £5 billion per annum lower than previously. Do you believe that that's going to help or hinder our ability within the UK to deliver upon our net zero aims?
As I said, Stephen, I don't think it's going to change. It's not going to change the activity set of all the investments I've described to you here in the UK. We are still a net zero company and endeavouring to be there by 2050 or before. There is going to be that 20% target to increase oil and gas production. The reduction, this is about BP capital. It's not about BP's ability to encourage investment and finance into these activities. And that's exactly what we've done with the offshore wind JV that we've announced in partnership with JERA that will stand up later this year. It's what we describe as capital light. So it's working by setting it up in that structure. It means that the wind business is not fighting for capital internally within the company, either in country or on a global basis. Capital is being overall reduced, as you'll have seen in the press release if you've skimmed. And what it does, it actually gives the joint ventures as structures and entities in their own right the opportunity to look for different financing platforms and leverage investment in different ways that you couldn't do within the BP disciplined capital frame. So there is an opportunity, particularly around when I think about our low carbon businesses, offshore wind and BP Lightsource, the solar businesses, to actually leverage more investment it's not going to be off the BP balance sheet, but more investment into accelerating the development of those businesses globally. And as I said, JERA will be, when it comes together this year, top 5 global wind developer. So it doesn't hinder the transition. It creates the opportunity. It's a smarter structure with smarter access to potential financial support to go faster. Yeah? Does that give you the answer? Okay, good.
Right. Thank you. Just going back to GB Energy, I think, bluntly, is this the best way to spend £8 billion of public money, in your opinion, in terms of your experience in the industry? So, for example, Louise, you said that is it 18 billion that BP are investing, 2/3 into green renewable, which is £12 billion. That's more than the 8 billion. Hebe, you said that speed and stability is more important than financial incentives. So, does this money that the government are putting into de-risking investment, is that the best thing we can be doing, or is there things that we can be doing for a lot less public money, which will actually elicit the same or different response from the industry that are already there, using the skills and investment which are already existing, or is this just a smoke screen that's going to actually eventually either attract different investment or drive investment that could have been there already elsewhere?
I think it's a great question, Harriet, and I think it's really difficult to answer not knowing what their plan is. I think that's the thing that as industry we're quite keen to understand. How do you want to work? What is it that you want to do? I think if as a company it was trying to replicate, for example, what private companies were doing, that wouldn't feel like the best use of public money to my mind personally. But I think, as I said before, if it's about investing in certain things where you are less likely to attract capital, private capital, but it would leverage that private capital, and I use ports, I think, as the example, then that to my mind, could make good sense of trying to crowdfund in private investment and create jobs and economic value and growth. But without seeing the detail of their plans, it's a little bit difficult to go any further than that.
Understood.
I would agree. It's hard to comment without seeing and understanding what the ambition and aims are for the entity. But I would say that, of course, I think anything that can be done to reduce customer bills should be sought after. I think there is a question as to whether this will support and help that. But, of course, it's hard to comment without understanding the full plans that I'm sure GB Energy will set out in time.
So, again, speed to get those things forward as quickly as possible is key.
Yeah, there's an awful lot of lack of clarity at the moment that just means that people are holding off, not knowing and not being able to commit. And I think the other thing that they could do is support the supply chain. You know, we've seen the Clean Industry Jobs Bonus, for example, just more recently announced. I think that's orientated around trying to support the transition, as I understand it, but also, which is very welcome, but it's also thinking about how do we underpin and support the supply chain and keep the skills here, and keep the capability here, because while we're as operators or investors, actually we're very reliant on the supply chain capability. We do develop a lot of the functional capability ourselves, but the supply chain's really important, and it's important for both the oil and gas business and all of their transition businesses, because the skills are interchangeable.
So, thank you.
Next question is from Douglas McAllister.
Thank you, Chair. We've focused a lot this morning on investor uncertainty and market uncertainty. I'm more interested in employment. Can I ask both of you, first of all, how many oil and gas job losses have your businesses experienced in the past decade?
I haven't, Douglas, got the numbers for the past decade. I can go back to, I think, 2020 and look over the last half of the decade. So I think with COVID and into the energy crisis, we reduced the workforce by about 30%. And then in the subsequent part of the cycle, more latterly in the last couple of years, it's increased back by 25%. And you'll appreciate the nature of the oil and gas industry is cyclical. So that's when you hit the highs and the lows. That's how the employment pattern also shifts. And also it's quite a transient workforce, as we talked about in terms of the supply chain skills coming in and out of the industry. But so broadly, we're about 1,000 people in our 2,000 strong team directly in BP. There's about 1,000 people in the North Sea business, and about half of those work offshore.
So we're a relatively new company in comparison to Harbour, but as a result of the EPL, we have had to make the decision to cut 350 jobs. So that's about, again, similar, just under a third of our workforce. and without the clarity, we're not able to say how much further that might happen. Of course, if we're not able to invest and we're not able to produce, then that does have knock-on impacts on job stats. But ultimately, we want to be able to see further production and hopefully really work up and maintain our base here. We still continue to try and bring in apprenticeships and young industry into the sector, because I think that's critically important as well. So we continue to try and promote the workforce there, particularly in Aberdeen, but it is having knock-on impacts, and we've had to make decisions, sadly, as a result of the EPL.
How many do you anticipate then? How many job losses in oil and gas do you anticipate, therefore, in the next decade? And what's your strategy to manage that decline? If it is to be a decline, how will you reduce that figure? What concrete steps are you taking, each company? Is it still to transition to job opportunities in the clean industry, or are we seeing a shift away from that based on today's announcement, for instance, from your own company? It seems to be that the strategy has completely shifted. You had very ambitious climate targets. These seem to be being scaled back, if not abandoned, based on today's announcements. So what's the strategy in relation to those future jobs? Where do they lie?
Thank you, Douglas. I think it largely depends on whether we can get clarity on the conversations we've been having this morning around the investment framework for the North Sea. There is no expectation that I need, if we can get that clarity and the North Sea competes for investment competitively, then we can see a long-term future in the North Sea, just as we have for the previous 6 decades. We can see decades ahead. So that doesn't necessarily mean that there'll be a reduction in our workforce. So I understand where the assumption comes from, but I wouldn't necessarily say that's our view of what the future looks like. That's purely dependent on how investable the opportunities are. But we know the economic opportunities and therefore the jobs are there in the oil and gas business. What do we do in terms of workforce planning? Well, clearly, we pay a lot of attention as a company to the skills and the capabilities that we need. We look at the new businesses that we're going into, and I think I quoted you earlier, we moved sort of 37%, I think it was, percent of the internal workforce moved into the CCS, the hydrogen and the offshore wind businesses a couple of years ago from the oil and gas business. But we still need to retain a very robust, deeply capable and technically competent organisation in our oil and gas business, because we will be doing this for a very long time to come. So we will work towards delivering the transition in a smarter way as we possibly can. We retain the desire and the commitment, ambition to be a net zero company by 2050 or sooner, and we will workforce plan for the movement of those skill sets and capabilities into those different businesses at the time we need to deploy them. And that's the magic part to this. This delicate balance of the timing of which the oil and gas activity ramps up and potentially ramps down, and the timing of which the low carbon businesses build out and are ready to operate. And we need to do all of it faster. The decision making needs to be more pacey.
Well, quite, and I appreciate it's a delicate balance, but earlier in your evidence, Hebe, you made reference to green technologies and that you're so desperate to roll them out, and you also made reference to it not being a mismanaged transition. It just seems as though today's announcement is driven by shareholders rather than transition, rather than the need for climate action. You're pushed to this decision, are you not, by unhappy investors losing out in profit and shares rather than concentrating on ensuring future jobs?
No, not pushed by that at all. I think we've learnt an awful lot in the last 5 years, as I said earlier, and we have made some major transition investments around the globe. I mentioned the bioenergy company in Brazil. I mentioned our investments in biogas in the US, our full purchase of BP Lightsource as one of the top solar developers in the world, the Geranex JV to create top 5 offshore wind. So those are all fantastic investments in the transition. We did not have that 5 years ago. We've done and invested a lot. What we are saying is the pace, we have to keep investing now to return value to shareholders and build a stronger, more efficient company. We need to make sure we are resilient to the pace at which the transition goes. If we are investing too quickly ahead of everybody else being ready to transition, that is not a good use of our capital investment opportunities. So what we are trying to do is to adjust to the pace of this transition. And I have said since I arrived at BP that actually this is going to be difficult. It's going to take everybody to move in concert to make this happen. It's not just a single decision of one company and what it chooses to do. So I completely appreciate your point that it was very ambitious 5 years ago. We have learnt a lot in the last 5 years. We've invested in a lot of new businesses. And I don't mention the EV business, but that's another one of our transition businesses, which is seeing a lot of investment. All of that will continue. We just have to do this transition from our point of view. We want to do it more smartly and more efficiently and try and get those returns for our owners, because, yes, they are helping us to do that. If we don't generate those returns, we can't reinvest and do more. That's what we are there to do.
If I may, I think to back that up, so if we don't manage the decline, if we mismanage it, essentially, there is the possibility that we reduce the oil and gas workforce by 50% without there being the requisite jobs for them to go into. But on the same side, at Harbour, we are supporting and investing in the jobs of the future as well. So if I speak specifically to what we're doing in the Viking project, which is in Humber, we are partnered with what's called Catch. It's a program that looks to support and train up sort of 1,000 apprentices per year. That is also just our ability to be able to staff our future projects within the cleaner energy side as well. So we are looking to make that transition over, but we need to keep bringing people into the oil and gas sector as well to train them up. Those skills that they learn in the oil and gas sector are the same skills they're going to need to deploy in the green energy sector. But we need that transition to happen in a smooth pace that allows for the effective landing spot for those jobs to pass over to the green energy sector. It's not there yet. We're absolutely moving towards green energy, but we're at a pace where we still rely on 70% of our energy coming from oil and gas. That's not going to turn off overnight. We need to take the decisions that boost green energy, but unless we look after our oil and gas sector first, we're not going to have those jobs because they will go abroad.
Thank you.
Thank you both very much. That concludes our first session. So we'll give a few minutes for the panels to change over. Thank you. And we'll suspend broadcasting while we do that. thank you very much for this, for the panel this morning coming along, and for waiting through the first session. That was very helpful. We'll try to get underway just as quickly as we can. So I'll ask, if I may, each of you just to introduce yourselves and give us a very brief bit of information about the role your organisation plays in the North Sea, please. I'll start with Jenny. Thank you.
Morning, Chair. Thank you for having us. I'm Jenny Stanning. I'm the External Relations Director at Offshore Energies UK. We're the leading trade association for an integrated offshore energy industry, and we have about 420 members spread right across the UK, but with a significant footprint in Scotland and the northeast of Scotland. Our members are active in upstream oil and gas exploration, production, development and decommissioning, but also in carbon capture and storage, hydrogen and offshore wind. So thank you for the opportunity to talk to you today.
Thank you.
Morning everyone, I'm Russell Borthwick, Chief Executive at Aberdeen and Grampian Chamber of Commerce. We're a place-based membership support economic development organisation. We represent about 1,300 businesses which operate in the northeast of Scotland. Around a third of them are involved directly in the energy sector, but 70% that aren't. Many of those are indirectly dependent on a strong energy industry in that region, whether it be ranging from professional services to hotels to retailers to hospitality businesses to transport providers. So this is very much about the extended supply chains and the risk to that if we deindustrialise too quickly and get our transition steps in the wrong order.
Thank you. Neil?
Thank you. Good morning. My name is Neil Gordon, Chief Executive of Global Underwater Hub. It's the trade and industry development body for the subsea and underwater sector. It was formerly known as Subsea UK. We went through our own transition a number of years ago. We have 350 member companies across the UK, represents over 50,000 people employed in the industry. It generates about 9.2 billion to the UK economy. 38% of that is exports. We are recognised in the UK as the world leader in underwater engineering and technology. We are working across a number of sectors, traditionally oil and gas, now offshore wind, wave and tidal, aquaculture. It's all underwater engineering and technology. We have a base in Aberdeen, which is the headquarters. We also have a base in Newcastle, where there's a cluster, and also in Bristol. And those strategic areas where clusters are is where the future of offshore wind clusters will be, particularly in floating offshore wind. And we see the main transition of the UK's world leading capability in subsea to be the world leader in floating offshore wind in underwater. And we have a number of forums that cover operators in oil and gas, developers in offshore wind, specialist areas such as cables, mooring and anchoring, underwater operations and maintenance. Thank you.
Thank you. Becca?
Hi, thank you very much for the opportunity to come today. My name is Becca, Groundwater, Head of External Affairs at the Energy Industry Council. We are a trade association who represent the supply chain companies across all energy sectors, so traditional oil and gas as well as nuclear, moving into renewables, looking at carbon capture and storage, solar, biomass, everything. We are energy agnostic, so we look at how they are integrated, how it is one energy system. We also help our members globally, so we are headquartered in the UK, but we have offices in all energy hubs, so Rio, Houston, KL and Dubai, and we look and we help our members export, we look at energy markets everywhere, and we protect those technologies going forward. Thank you.
Yeah, thank you all. That's very helpful. Can I address the first question to Jenny, please? Can I ask you, Jenny, what your view is of the government's position not to issue new licences to explore oil and gas fields?
Thank you, Chair. I think we should look at that question in the context of net zero, and I do think it's important to set that context. There's been a lot of international and some domestic commentary around net zero and whether we should back away from that. I'd like to be really clear with the committee that the members that I represent are fully committed to playing their part in delivering net zero by 2045 in Scotland and 2050 across the UK as a whole. We think there is a role for oil and gas in that transition, and we also think that granting licences for oil and gas activity is compatible with that net zero journey. So the quick answer is that licences are important and that we think that they should continue to be awarded subject to robust climate checks. Let me explain why they're compatible, if it's okay, Chair, with that net zero journey. Demand for energy in the UK, about 75% of that demand is met by oil and gas. So it's our view that if we still demand the product, if we still need the product, we should make the most of our homegrown oil and gas industry. This has a significant economic impact on Scotland and the rest of the UK. It generates about £15.2 billion worth of GVA to Scotland in 2023, and it supports 90,000 highly skilled jobs across Scotland, 200,000 jobs across the UK. The UK has been a net importer of oil and gas for some years now, so if we don't maximise our domestic production, we just have to import more. Imported oil and gas, as you've heard from previous witnesses, is produced at a higher carbon intensity elsewhere than we can do here in the UK and in Scotland, but it also pays no taxes and it doesn't support any of those jobs. That's why I think ongoing activity and licences are important.
And the consultation on the North Sea oil and gas licences policy, what outcome would you like to see from that? I think I can guess, but I'll ask anyway.
If the UK government wishes to change the position on licensing, then we would ask that they publish that consultation quickly. You've heard from previous witnesses about how important certainty is for investors looking to make longer-term, capital-intensive investments in the UK to support activity and jobs. So we'd like to see, if we are going to have a consultation, that consultation published at pace. And in terms of what's in that, just as I said at the start, a pragmatic approach to delivering net zero, and one that looks at the opportunity that comes with net zero. Yes, it will be challenging, but you have a wonderful sector here across all parts of the energy space that you will hear more from all of the witnesses about. And there should be a role for all parts of that sector to deliver net zero. Licensing is part of that, and we would ask that a pragmatic approach to licensing is included in that.
Thank you. Maureen Burke.
Thank you, Chair. Good morning, everyone. Thanks for coming. I'd like to direct my question to Mr Borthwick. Recently, the AGCC described extension to the windfall tax as reckless. And earlier we spoke about the energy crisis that face companies who have made excessive profits in the last few years. Given so many are still experiencing high bills, can you appreciate why the UK government has made the decision to continue addressing what appears like an unfair balance between customers and the companies?
Thank you for the question. I think we need to be careful not to directly link the energy bills of domestic consumers with oil price, for example. I mean, there's not a direct link between those two things. Our call came on the back of the fact that we do not believe that windfall conditions exist in the North Sea. Today, the oil price is around $72. The 15-year average is $78. Now, that's not inflation adjusted. In the same time, compound inflation and therefore the cost of recovery has gone up by about 36%. There are no windfall profits being made. Celtic Football Club made more profit in 2023 than Harbour Energy, the biggest North Sea producer, and every other nation in Europe that briefly introduced windfall taxes because of the Russian invasion of Ukraine very quickly took those away. So we believe that by having it in place, it's actually limiting the confidence in the investment that you heard from the first panellists this morning, and actually stopping activity happening in the UK. We've got a very simple choice to make. The UK needs 15 billion barrels of fossil fuels out to 2050. At the moment, only 4 billion of those will come from domestic production. We have the opportunity to make that 8 billion much higher, as Jenny said a moment ago, value to the economy in terms of retention of jobs, in terms of investment, in terms of return to the exchequer. And we know, and the Climate Change Committee reminded us again this morning, that that is much cleaner than imported gas and oil. So we've got some choices to make, and I really think the opportunity is to wrap all of these discussions into a cohesive industrial strategy, because at the moment we're actually heading towards deindustrialising the nation when we have a major opportunity to reindustrialise it.
It's kind of I had another question that would have been caveat to that, but you've said that it's not, you know, I won't go into that. That's the final question, but just so what is your assessment of the industry's progress towards the North Sea transition deal's targets?
I think we heard this morning from the Climate Change Committee that the industry has been decarbonising very, very quickly. I think it's great that the UK is taking a leadership position, and it's right that it does that. I think the UK is responsible for around 1% of global carbon output. 3% of that 1% comes from North Sea production. There's lots of talk around at the moment around Scope 3 emissions. I'm going to take you back to the maths classroom, which is probably not a welcome thought for a moment. And actually, when we're doing equations and inequalities, if you had a constant on either side of that, you could actually take them out. And what we've actually got is Scope 3 is simply end use. We need energy to light and heat our homes, our hospitals, our schools, to keep the country moving. So the question we've got is a very clear one. Do we want to take domestic production with much lower Scope 1 and Scope 2 emissions, or imported LNG from the types of despotic regimes that the Energy Secretary says he does not want to do business with, rightly, or do we want to maximise our resources in the UK? And that's the question that I would put to the panel.
Chair, could I add a comment to the North Sea Transition Deal? I mean, Russell's really outlined some really good progress around decarbonisation, and I do think it's important to know that we've met that first decarbonisation target, which is a voluntary target between the industry and the government. And our regulator, the North Sea Transition Authority, thinks we are on track to meet that headline target for emissions reduction of being a net zero basin by 2050. The North Sea Transition Deal will be full in about 2 weeks' time, I think. And you asked about how we're doing around progress towards those targets. Decarbonisation of the operations of upstream oil and gas is one really important part of that. But there are other parts to the North Sea Transition Deal that the sector has been working really hard on. Things like our world-class supply chain that I'm sure we'll come on to talk about. How do we support investment in that world-class supply chain? We've worked with Rystad to map the capabilities of our existing oil and gas supply chain and how that maps across particularly into floating offshore wind. I'd be pleased to provide a copy of that report to the committee for your reading if you would like. So some bedtime reading for you all for later. We've also launched a supply chain investment task force that's looking at how you secure anticipatory investment into that really important supply chain for new energies as well. We've secured funding for the Centre for Doctoral Training, which is really important when we think about geoscientists and how pivotal they will be, particularly in the areas of carbon capture and storage. And also just last month, we launched the first iteration of the Skills Passport, which was a really important commitment from the North Sea Transition Deal. So highly ambitious. When it was launched, absolutely transformational. But I think we all accept that there's plenty more to do.
Thank you very much for that. Thank you.
Harriet has the next question.
Thank you, and thank you all for coming. What role do the UK oil and gas companies, and I guess also then the extended supply chains, play in driving sort of us towards the energy transition and cleaner energies? And is there a balance that can be struck, and can we quantify that between the reduction in oil and gas and the speed of that versus the scalability of renewables and actually getting that balance right? I'm not sure who wants to take that. Yeah, Becca.
If I could come in here first. So in Scotland, we're looking at 84, 87 and around 86% of our supply chain companies who are in wind, CCUS and then hydrogen have come out of oil and gas industry. So what I mean by that is they are oil and gas based industries who have moved into these other sectors. So what we find is that the energy supply chain is not one thing. So when we talk about these new technologies, we tend to look at them in the silo. Actually, they are delivering across the board. And that ties in with what we heard earlier in terms of we need that actual managed project delivery. Because if you are a company in oil and gas, but also in wind, and Neil, I'm sure you can talk to this as well, if you have that 13-year time lag, and you're a company doing more than one thing, you have to finance the transition. And at the moment, the only way to do that is through the oil and gas technologies. And in Scotland, we have this crossover of technologies. In the rest of the UK, what we see is the more sort of standalone organisations. So it will be just in CCUS or just in hydrogen. What we are seeing with them is that they have the initial investment and they may get off the ground, but they then struggle. Firstly, there isn't that longer-term financing strategy, but also there's not the project delivery, or it is coming in numerous years, which isn't enough to sustain the delivery and the capacity building of those companies. They then look elsewhere because we have international markets. And if they are operational in hydrogen and they see the market delivering in Australia and the risk factors and the risk profile and the finances there, we are seeing that capability leave the UK to go to these other energy markets. So I think that would set the scene for how that transition and the supply chain actually develops. I'm not sure.
Yeah, if I could perhaps add to that. I mean, The energy transition we've talked about, and it's a word or a statement we've used for a long time, but it's moving from one fossil fuel-based energy system to renewables, and that is the transition. And it's moving over a long period of time, and I think we've almost treated it as if we're trying to switch, and switch is often being used by the supply chain. We can't switch. We've got to make that move over a long period of time. And we've talked, and I mentioned this last week in our event in Aberdeen, our flagship event, that is the gap between one state and one energy source and the other. And we're not managing that gap. So we're not minding that gap very well. And we can make that move if we want to move from one energy to the other, but actually we're not looking at the industrial impact. And that's really the thing we have to understand, is how can we move our industrial capability across to deliver a lot of that new value. Now, the challenge that we have, 89% of our member companies are already working across multiple sectors. 92% say they will when the time is right. So there is ambition, there is investment, and conditions need to be there, but it's the project pipeline is the key thing. If we decline, if we're moving from an oil and gas to a renewables, let's say, that gap, if we decline the project, then the capacity and capability of our supply chain will decline quite a lot. And when we move across towards where we want to achieve that net zero target, the capacity and capability will not be there. So that target will start moving to the right again. And that's a danger that we will lose out not only to ourselves, but we'll lose out to overseas supply chains, because they will be watching very carefully and will be ending up being a custodian of other people's technology. So it's key now that we look at the industrial strategy to ensure that we can start building for that 5, 10, 15 year opportunities that are coming round. And there's no doubt about it, we do have the capacity and capability to do that, but the conditions for investment are not absolutely perfect. And I'm sure some of the I suppose, opportunities that will come out maybe through GB Energy, how some of those steps could be let's say, de-risked in the investment will come out later. But it is that bathtub effect that we've got to try and close that gap and manage the transition and the timing of that. And it is taking a lot longer than has been anticipated. We haven't got a very good history if we look at, you know, our shipbuilding, our steel, our coal industry. We have managed to shut down industries, but also we've not been very good at managing the industrial opportunity. We missed out hugely on fixed wind and getting supply chain capability in the UK. We've got a big opportunity now as we transition into floating offshore wind, where we do have a lot of capacity and capability in the underwater space. So let's focus on some of the areas where we can compete and be world leaders, but it does need a real concerted government effort to get behind that. Thank you.
Can I add a jobs? Douglas was asking about jobs previously. Just to remind the committee, about 200,000 people in the UK have a dependency on the energy sector for their living. Around just less than half of those are in Scotland. But the interesting point is, often people talk about oil and gas giants. Only around 10%, or perhaps less now, of those 200,000 people work for operators. The rest of them work largely for SMEs, often referred to as the supply chain. It's the best in the world, and as other panellists have started to say, and we're seeing actual evidence of this happening, because we're decelerating traditional oil and gas work, which has been their staple for many years, and because the scale and profitability of work isn't there in renewables, then we're both risking lots of those jobs, or we're seeing it taking flight overseas, because other energy producing nations are turning to Scotland and turning to the northeast of Scotland, because they understand we've got the best skills, the best resources in the world, and therefore that won't be present in the North Sea when we do start to ramp up our renewables ambitions here, because it will be deployed elsewhere in the world, and that would be the wrong thing for the country, I believe.
I had one last point, if I may, I'll be quick, Jenny, which is we often talk about oil and gas being with us for decades to come and the supply chain being anchored in the UK. These are brilliant sentiments and great ambitions to get after. We mustn't be complacent about that. Just as fellow panellists have said, our supply chain is the envy of the world, and they are actively encouraging companies to move elsewhere, to go and base themselves elsewhere and service an energy transition elsewhere. These people we talk about, these 200,000 across the UK, 90,000 in Scotland, they are brilliant engineers, technicians, scaffolders, welders. Their jobs are in demand elsewhere, and we've got to make sure that we are irresistible for investment here in the UK to sustain that supply chain here.
Yeah.
Actually, building on that, Jenny, that's really helpful. So how does the profitability or otherwise of oil and gas companies help or hinder our transition into green energies or etc.?
So I think it's essential that oil and gas companies, and by that I mean the operators, the developers, but also the supply chain, they all need a revenue stream to fund their expansion into new and different energies. The projects aren't there yet at the scale to keep these supply chain companies going in the UK. So an ongoing pipeline, predictable, we talked about stability, predictability, an ongoing pipeline of predictable activity will keep the companies, but also the jobs anchored here in the UK now, so we are ready as we scale up projects in wind and in hydrogen and in carbon capture. It's essential.
Thank you. And just, Neil, just a quick follow-up on floating offshore wind. You said it's a real opportunity for us. Could you just expand on what those opportunities are, and also whatever challenges there might also be as well, which might stop us reaching those?
Yeah, so floating offshore wind is quite different from fixed. Fixed above the waterline, essentially, turbines, towers, etc. are the same as what was on. Now we've taken them into deeper waters. Going to floating when you're into 60 metres or more, which means large structures the size of football pitches, thousands of tonnes, very difficult to manage and install. But that's what a lot of what we've done in the UK over the year, not only here but around the world. But the underwater technology is, how do you move the electricity around the underwater when you've created it? So the cables, the systems, and it's not just the cable, it's the materials, the research into new materials such as copper, aluminium. How do we improve the distances, the losses? Let's say the floating ones will have these what we call dynamic cables in the water column, which will have a lot of different forces which can be designed from some of the science and engineering that was developed in oil and gas from cables that were used for powering subsea systems. Mooring and anchoring systems. When we look at these large structures, which are the size of an Eiffel Tower, on maybe up to 100 of those, with huge chains, mooring systems and anchors, all those have to be developed. Now, if we think of traditional methods of anchoring those to the seabed, it's not feasible. The amount of steel, the type of chain, etc. So things like new synthetic ropes need to be developed, and we have the capability across the country. We can research, scientifically develop with the universities through the high-value manufacturing catapult network across the UK, and we've got the testing capabilities through the ORE catapult, some of these areas, and bring these into place. But those are quite risky steps for a lot of companies because the technologies may not be needed for a number of years. So how do we bridge the gaps in the risk and investment for those companies to build the factories, to invest in the people, to research and develop, because that return on investment may be some time away. So the underwater part is the cable systems and all the associated part with that. We can move electricity around the country and land it in other parts of the country as opposed to taking it to the nearest landfall. We can do it over longer distances. The actual surveying of the seabed, maintaining and operating robotics, this will all play an important part of maintaining these fields. 80% of the world's wind in the future is predicted to be floating offshore wind. It is happening here in the UK first, the first industrial scale one being Greenvolt, being developed by Flotation Energy just off Aberdeen, which will be a 35 turbine development, is now into full motion of getting this developed in the next couple of years. It is taking probably quite a lot of the risk in some world firsts, and I think we've got an opportunity to help some of that in the UK to be that world first and be the leader, as well as developing broader scale opportunity right across Scotland and the UK.
May I just give a quick anecdote to back up very quickly, Chair, if you don't mind? You mentioned Port of Aberdeen earlier, and I wanted to bring them back into it. So just an example of that lag on investment and return. So 420 million private investment in the UK's largest new port for 100 years. In 2023, they were pleased to see that 10% of their business, their traffic, was offshore wind related. That translated into 1% of their revenue. And just in that simple snapshot, it demonstrates that big investments are being made, but the returns aren't there quickly enough, so we still need a balanced portfolio of other work for the supply chain, otherwise it won't be able to be sustained.
Thank you very much. Thanks, Chair.
Eileen, Stuart.
This is for Neil. Neil, I think you've actually answered this question, but I'm going to ask it anyway. So what more can the UK government do to encourage greater domestic supply chain investment?
I think If we are going to make a difference, I look at what we've done in fixed wing, then I think we've ended up being a caretaker of a lot of overseas technology. We haven't created the jobs, we haven't created the technology first here. So how do we look at that? We're very good at supporting small technology investments. I think we've got to be much bolder, much bigger in our ambition, but look at where the opportunities are. We focused on creating, through the CFD process, which was very successful in bringing costs down, but that's driven value out and margins, etc., which has made it a very difficult place to make money. But I think if we look at where are the opportunities for UK Scotland to invest, then we've got to pick the winners. It's pointless being a me too. There has been a lot of talk around ports. We have to look at where the developers and the developments are going to be, and then look at almost like an integrated system development, because not one port will be able to deliver everything. We've got to look at what the requirements were. So, for example, some ports may be more suited to marshalling and installing, and some of these big structures will be fabricated in sections and come in from other parts of the world. They'll be assembled and managed very carefully here. Cables may come in from different parts, mooring and anchoring. The service bases may be in different things. So we've got to look at a much more systems integrated approach to these projects, and we haven't really got that view yet. But if government are to do anything to help, it's an industrial scale technology view. In my view, certainly in the underwater space, we can capitalise on that. That's the next biggest industrial opportunity, I think, for UK PLC and Scotland PLC and floating offshore wind. But we've got to be realised where we're competitive and where we do have the infrastructure, the people, the skills, the universities, the testing, the research facilities to be that world first and lead in that space. Thank you.
If I may, just to add on to that piece, the other piece that government really could do for our domestic supply chain is promote it. We've all spoken about the capabilities that exist in the oil and gas sector, but also the burgeoning capabilities that exist right across the sector. So it'd be good to see government out there using that amazing network of embassies and overseas trips to promote that capability to overseas investors as well. So that would be one specific that they could do to promote that. But also, industry is doing some really exciting things to promote our own domestic supply chain. We're looking at procurement, for example. How do we procure properly here in the UK? Take the lessons from existing industries like oil and gas and translate that into new industries as well, so they can learn from our mistakes over 50, 60 years of developing that kind of system. So it would be good to see government getting behind that and supporting that kind of cross-sector learning.
Thanks. And this is for Becca. The Energy Industry Council's called for an integrated supply chain. What does this look like, and how can the UK achieve that?
The integrated supply chain is, I'll go back to the example I gave, whereby companies are already doing more than one technology, but the conversations that we have around that, and we work across lots of skill groups, task forces, government groups, we all work together as trade associations, and the conversations are very siloed, and what isn't taken into account is that it's these companies that are going to be expected to deliver across everything. And there's no sort of real, like Neil talked about, that industrial strategy that works backwards, and this is what we asked for during the previous election, was around setting out 2050, setting out 2030, and looking at the pinch points and looking at how we can help the supply chain grow now to deliver across. So we take one company who are operational in oil and gas and carbon capture. And because of the success of moving into carbon capture, they have gone from an SME into what counts as a large corporation. They have now had all of their funding for new technologies and renewables pooled. They don't qualify, which means they can't remain competitive in the new technology. They are reverting back to oil and gas, and they are looking at 2 international markets to keep the money coming in to be able to actually be competitive in the new technology. Unless we have that understanding of what the supply chain is and how it works and how it does operate, we miss how we actually help them. And I agree with Jenny, we need that global recognition, but unfortunately government policy doesn't support that. They are not allowed to help typically fossil fuel companies and in country, and we're not allowed to talk about them. That's hurting our supply chain because they're doing it alone. So we also have the skills and the jobs, and again, I'm always the negative one in the room, but unfortunately, when you talk about an industry and we don't support it, but we look at ways to manage the decline and we look at ways that it could be better and what we need to move to, we're then surprised that people don't want to go into that technology. And we've heard about geoscience and we've heard about the skills that we have that could go elsewhere in the jobs. If we're not encouraging people in to recognise that energy is this, and this, we're already missing out, and we see that with the universities. So the integrated supply chain is pulling all of these threads together and going, apprentices are brilliant, and the work that we do in our constituencies is brilliant, and what we are delivering for net zero, and the fact that these small SMEs and these community places want to deliver net zero. Do they think it's achievable? No, because this integrated, this actually understanding how we drive that forward and how it makes a difference from 1 to 2050, we really have to get that understanding and recognise that companies need help, not just against oil and gas, but to be great at everything, because that is our legacy and it's what we are going to deliver going forward, and we build on that. So it's pulling all of that together and saying the expertise across the board, and recognise that when we talk supply chain, they do everything and they want to do everything, and they are amazing in the UK.
Move on to Maureen Burke.
Thank you. Just going back to Russell, a previous comment you made about the workforce. There are 84,000 jobs in the oil and gas sector, and we do know that the government are committed to supporting these people into clean energy jobs and into the industry. But what you said there, that some of these people are now going abroad and going overseas. So am I correct in that's what you said, that they were?
Yes, so we're certainly seeing, I think some of the other speakers have reflected that if you're running a supply chain business right now that has depended on traditional fossil fuel activity for the last number of decades, and because we're artificially accelerating the decline of the North Sea quicker than I believe that needs to happen, and I gave you some figures on that earlier. That there's two choices. They either need to leave the industry altogether, or they need to find work where work exists. And at the moment, that can quite often be in other energy producing nations which turn here because they know that we've got the best skills in the world, and we are seeing that starting to happen.
No, that's fine. Thanks for clarifying that for me. So I suppose what I'm saying is that with the workforce you've got, do you think that more needs to be done to train and recruit these people to meet the targets that we're going forward with?
I think the general consensus is that the people that we've got in the sector at the moment have highly transferable skills. What we don't have is the work for them to do. That's the challenge. Where we are seeing challenges is particularly because of some pressures on universities, some of the rhetoric around fossil fuels and oil and gas. Many universities are paring back or stopping altogether delivering many of the degree courses that have traditionally taken young people into the energy industry. And because of the uncertainty around it, young people, our most talented young people, are choosing not to go for a career in energy when we actually need them, because they are our climate solution. So I think there's been a lot of the negative rhetoric has actually led to a reduction in the opportunities for the future workforce, not just the opportunities, the actual career ambition. Say, why would I want to have a career in there? I'm not sure where it goes. Oil and gas is bad, isn't it? So I think current workforce highly transferable, not enough work. We need to give them the work, but the future workforce is a concern for me.
If I may, Chair, on that, there's an excellent report by Paul Deleu of Robert Gordon's University that puts some statistics around when people can move from one part of the sector into another, and he talks very compellingly about the Goldilocks zone, and we need to get there where it's just good, where it's just perfect, and I think that Goldilocks zone is really important when we're thinking about reskilling. That report also shows there's about a 90% transferability between oil and gas skills and the new energies, particularly in places like carbon capture and storage. Carbon capture and storage obviously really important if we're to hit that net zero goal by decarbonising rather than deindustrialising the UK and Scotland. And then I think we will need new entrants into energy. Of course we will, because this transition is going to take decades. There are jobs in new energies we don't even know about yet. And that should be really exciting. And you know, Russell's absolutely right to talk about we should get our universities and our colleges to find energy exciting. We should get our schools to find energy exciting for that next generation so that they want to come and work here if we have the jobs for them and the projects and the activity. And let's also not forget, of course, our existing workforce and the great role that our colleges and our current apprentice schemes do as well. Very important that they're supported.
Might be a task for us MPs to get out there then and see if we can get these people to have that uptake.
I think the sector would love to see committee members out and about talking about positive opportunities that exist. I think that's a wonderful thing to do.
Thank you. Thank you.
Jack Cross.
Thank you, Madam Chairman. And my substantive question was going to be about skills. We've talked a lot about it already. You know, what skills does the clean energy sector and supply chain need? But I suppose my question was what needs to happen for employers to invest in those? So that was substantive. I think we've covered lots of it, but I'll give you the opportunity to add any comments you've yet to make. And then I was going to, my supplementary, perhaps is best focused at you, Jenny, was about the energy skills passport, when that might be operational, whether you could tell us a bit more about that.
I'm happy to. I think we've talked a little about what employers need to invest in skills. If I take you right back to the evidence session you had beforehand, good stewardship of our existing assets, good regulatory framework, attractive investment environment, so companies put their money here in the UK, support jobs now, support jobs for the future, and that pipeline of predictable projects coming through that will allow people to anchor their companies here, providing high-skilled jobs for the future, will let us invest in skills. To your specific point about the skills passport, just last month we launched a kind of limited version of the digital energy skills passport, which allows employees to upload their qualifications and their skills to a digital passport, and it will throw up opportunities for them to look at and also further training opportunities. That's limited, it's phase 1. It's a good first step, and we've worked in partnership with Renewable UK, great example of cross-sector collaboration, and very much welcome the support from both the UK government and the Scottish government in delivering that as a first step. Phase 2 will come in the next few months, later on this year, so we're looking at where else does it go. So currently looking just at oil and gas and at wind, but the possibilities are endless. Becca's talked very compellingly about it being energy agnostic. There are multiple different parts of offshore energy and indeed onshore energy that could be part of that skills passport. And I think last point from me on that skills passport, proud of it as though I am, it is but one tool in a toolbox, and it will not on its own solve or deliver a just transition and support those workers that are looking at where they go next. It needs to be one tool, and there needs to be many other levers pulled, both by the sectors but also by both governments.
Becca, do you want to come in?
Thank you very briefly, Neil. To put some colour behind the reports that we hear about and the work that we hear about, there was one company, one of our members, who they had a contract for a particular technology, and they employed numerous people. We're talking hundreds of people, and the contract was paused because of policy and regulation. Contract was paused. This SME was then on the hook to find somewhere else to deploy all of these people who had signed contracts. So this SME takes the hit, and they then go, so next time policy stabilises out and they have the opportunity, they look at it and they go, I could go here, or I could go to this emerging market where I know they're going to use me and I know they're going to go, and I know that half of those people who signed the contracts to take on that employment will move, and I am then keeping them that way. The same company, I was also talking to them around investing in new technologies. They said to me it would cost $20,000 to put somebody through a year's training, which would then have them in this separate technology. There's no guarantee that the project of work will be there in a year. If they then train up this particular skill set, they are going to be poached by higher paying, bigger companies, potentially globally. So that company, again, misses out. Unless we have that project of pipeline, that pipeline of projects coming through, and we know where they can go and when, we're asking businesses, small businesses, to absorb a cost that they can't compete with. So that, sorry, just add a bit of colour around what we're talking to.
You want to come in, Mr. Gordon?
Yes, please. I think what we've done in the past in skills, we talk a lot about what the industry needs, when I don't think we've consulted with the industry enough. A lot of it has been done by, almost like a push type. Let's get 100,000 people ready because we think there's going to be 100,000 jobs. So I think we need to engage more with industry when they're ready and do a bit more of the pull through. So that's where we're focusing our efforts at the moment. Companies will say, yeah, we're going to need X amount of thousand, but we can sometimes line up those people and prepare them in the skills, but when it comes to it, perhaps they don't have the right skills. So I think that there's a bit of a mismatch sometimes in some of the projects going on. But I also find I'd like to support Becca's point about smaller companies do take on apprenticeships and graduates, and what happens, they get poached basically by bigger companies. And I think there's a real call to say, well, how can we actually bring more of those younger generation into the industry? Yes, we need to be more attractive. We need to sell the industry because it is very transient, it's very diverse, it's a global opportunity. But we also need to think about how can we help some of those smaller companies through those apprenticeship schemes and through the graduate programs, so more can be taken in. I recently had a meeting round table with a number of companies who employed about 5,000 amongst them, and they said they could probably double that if they could de-risk the challenge of having those big intakes of apprenticeships and graduates. And I'm not sure what the answer is completely, but I think if there was more support, then if you could bring more people in, then smaller companies would probably join the party and be able to help take more people in as well, because it's a big investment in time and money for them. Thank you.
Yeah, I think we've talked about integrated supply chains. I think we need to talk about integrated energy policy, and this is where I come back to industrial strategy again. Model industrial strategy has sectors in industry, it has the places that power those, and it has the skills behind them as the three main ingredients. And I think it's really important that we start a discussion around how we design an industrial strategy which holistically takes all those things, because at the moment it feels like policy is very piecemeal. There are lots of statements of intent, but they don't join up. And I think that's what's lacking here, and that's one of the reasons that the British Chambers of Commerce actually set up the North Sea Transition Task Force, chaired by Philip Rycroft. We're trying to take a cross-societal view from across common ground of potentially how do we take a different approach. It's become very toxic. It's the most complex issue that we've wrestled with probably as a community, maybe even since the Industrial Revolution. And it feels that it needs more joined up, grown up thinking than it's getting at the moment. So that's what we'd like to see around industrial strategy focus.
Could I just ask Jenny, you a quick follow up on the energy skills passport? Has the government been involved at all in the passport's development? Would you like it to be or not? Maybe not. Maybe it should be business led. Is there any way that you'd want more government involvement or improvement in that?
I'm so pleased you asked me about government involvement in that, because that's what I was going to come in on. Yes, both governments have been involved, Scottish Government and the UK Government. I think that's important. I think you're right to say it should be sector-led, but the support of both governments is really important, because that helps us work across the sectors, and it shows how serious we're taking this. A particular ask of government involvement going forward builds on some of the points that my colleagues on the panel have made, which is we would like to see a kind of cross-sector integrated workforce demand model. Which means that when we're planning for skills and where we need to focus, we're not taking essential skills from another part of the economy. It kind of plays on what Russell was talking about an integrated industrial strategy as well. It would be fantastic if we get all of the highly skilled engineers and welders that we need for offshore wind, for example, but not if that comes at the expense of key infrastructure projects for the rest of the UK. And that's where government can really play a role. It can bring its cross-sector view, a more holistic view of what's going on in the rest of the economy into planning like the Skills Passport.
Thank you, Jane.
Thank you. Elaine Jones.
Thank you. Just to ask, what could we learn from other countries in terms of how to best manage a transition from fossil fuels to clean power?
Right. I think we have been very quick off the blocks if we're looking at energy transition and ambition. I think we're leading the world in certain sense, but actually when we look behind, everyone else is saying, hang on, how quick, how fast do you need to be? And I think we need to sort of take a look back and say, well, maybe we've taken a step too fast, too quickly. Other countries around the world, I know it's been publicly noticed in places like Canada and Brazil, have said, look at the UK, learn from their mistakes, because we are making mistakes at the moment, and they are following suit and looking at how can we manage our transition. We often look to Norway as a very good example of how they transition. They have big ambitions to transition and are a very clean country, and their reputation is very strong, but they're still a very strong oil and gas producer. But their ambitions are to transition, and they see the long-term investment in renewables, but at a pace which is managed and just and fair, I think, for the country. So there are some examples around the world, but a lot of other parts of the world are talking about the beginning of their journey in transition. We are right in the middle of it. We're quite well down the road, and I think we really need to take a look at ourselves, because I don't think there are many great examples around the world for us to follow, because we are leading from the front at the moment.
Can I pick an example of what not to follow? Because it's sometimes important to learn lessons from what's going wrong elsewhere. So I'd like to pick up a nation which kind of went down a very similar path to where we're heading at the moment, New Zealand, a number of years ago. And what happened by for absolutely the right reasons, trying to do what they were doing, they accelerated too quickly. And what that meant in New Zealand was power shortages, power outages, significantly increased consumer bills, which is something that everybody is trying to move away from, and actually now a reversal of the bill, which actually is now encouraging domestic gas production again. New Zealand needs to get the most out of our existing fields and exploring new fields, is a quote from the government bill that's gone. So I think it's important that we learn from best practice and worst practice, because sometimes there are unintended consequences of trying to do the right things, but doing them in the wrong order or doing them too quickly.
Just a quick word on that one. If we're on a riff of looking at where we shouldn't, what we shouldn't do, is we've got our own example of how not to transition. If you look back to the transition from coal to gas, and some of the communities that have been really badly affected by that transition and are still affected today in terms of the economics in the local communities and how people feel about the transition. We have an opportunity to do better. There are some global examples of where we can do better. I think Germany's got some good examples of retraining people in fossil fuels and into new energies. And absolutely, like Russell says, New Zealand is a great example of a rush to end licensing for oil and gas, which is the example that Russell was talking about, and then having to reopen licensing. But that was too late, because operators did not want to bid for new licenses because they had already exited the basin and taken their supply chain with them. We must learn from these examples. We have a duty and obligation to the people who work in this sector to do better.
I think you've just answered my substantive question, but I've got another one. Is there a risk of investment in clean power going overseas if the UK governments and Scottish Government fail to maximise Scotland's potential?
Very short answer, yes. I think you've heard from all of us, yes there is, but we have such a wonderful opportunity, an economic opportunity of net zero and clean power if we get that right. We have the people, we have the organisations, we have the geology, we have the environment, and we have political will and a sector that wants to get involved and actively wants to be part of that. So the opportunity is there.
And it's not a risk, it's a reality which is starting to happen, and I think we've got a very short window, as you've heard throughout the day, to look at what our decisions are, to look at what our direction is, because if we don't get that right very quickly, then that is going to accelerate, Lillian, I think.
Chair, sorry, could I just very quickly, our companies want it. They have a legacy because we are a legacy basin, and we have that expertise, and the companies that are here want to stay here. But at the end of the day, they will go where they can be best utilised.
Can I also add as well, it is, we are competing for global cash and a lot of these times for investment. And I think when the UK set off on the CFD process in offshore wind, it was a very attractive basin, but there are other basins around the world who are catching up fast. And we don't have all the capability in the UK. We do still rely on international supply chain as well as UK supply chain, but the plan should be how can we make more in the UK and how can we create more jobs in the UK. And that's the key thing we've got to address, because if we can make it an attractive place to come and do business, we can attract the investment, but we've also got to attract the talent for the future. And the industry, and if we talk about the whole energy industry, we're all busy. There is a lack of skills and people, but we're not having that pull through of new talent because there aren't the skill sets there. So we're competing very hard for that talent. But we're not doing a very good job either of saying this is an industry which has got huge potential. The attraction, we work with primary schools, secondary schools, we're running a STEM returner programme with ECITB. All these programmes are great, but they're not at the scale that what we'll need for the future. Today, a lot of companies, the smaller companies, are saying we're busy, but it's just over the horizon. that we can see problems coming. On one hand, a lot of companies who have got the diversity, I say having been able to work in both renewables and oil and gas are good because they can balance that, and there's a very much a balancing act as they go through the transition. Some who are more heavy in oil and gas, I know there are redundancy letters being placed out at the moment, and we'll see some of that happening over the next few months.
That's the end of our questions, so thank you very much for all your contributions this morning. It's been very helpful to our inquiry and we're very grateful to you. So with that, I will close the meeting. Order